Good morning and a warm welcome. Holly Shields here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US market. World equity markets rebounded more than 1% on Thursday after US Senate leaders reached a deal to raise the US debt ceiling, while a global easing in energy prices tempered the deepening fears of stagnation. MSCI's All-Country World Index rose 1.5%. And the US stock markets closed high yesterday, October the 7th, pulled up by gains in tech sector, as positive sentiments grew after the Senate secured a crucial debt ceiling extension deal. The S&P 500 was up 0.83% and the Dow Jones rose 0.98%, while the Nasdaq Composite gained 1.05%, and the small cap Russell 2000 rose 1.59%. Senate Majority Leader Chuck Schumer said that lawmakers secured a significant deal to extend a short-term debt limit, allowing the Treasury Department to borrow up to $480 billion. The truce eased worries over a possible government default, and the negotiations were on for over 1 week. On Thursday, the Labor Department said that jobless benefits claims fell to a 3-month low last week, showing a steady labor market recovery. New claims fell by 38,000 to 326,000 last week, as the S&P 500 index saw its highest percentage drop in September since March of 2020. Consumer discretionary and basic material stocks were the top movers on the index, and 10 of 11 sectors remained in the positive territory. The utility sector stayed flat. Now moving on to the futures and commodities, gold futures were down 0.34% and silver increased by 0.35%, similarly, while copper rose 2.43%. Looking at the bond markets, and the 30-year Treasury bond yields were up 2.44%, while the 10-year bond yields rose a staggering 3.33%. With that said, it's time now for a short break, but stay tuned because I'll be right back to look at the Asian and Australian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on The Tech Beat, exclusive to Kalkine TV.
Welcome back, I'm Holly and you're watching the Global Markets Roundup. European stocks marked their best showing since July on Thursday, as easing in oil and gas prices offered relief to investors worried about runaway inflation, while positive earnings updates added to the upbeat sentiment. The Pan-European Stoxx 600 index rose 1.6% to reverse weekly losses, with buying seen across all sectors. The energy sector gained the least, up 0.2%, and the London markets traded in the green zone following a record monthly surge in UK house prices. With reference to the recently available data from Halifax, the British property prices rose by around 1.7% during September of this year when compared with August. Meanwhile, Eurozone bond yields fell on Thursday as energy prices held below recent peaks, easing fears of inflation and allowing debt markets to recover from previous session sharp sell-offs. And Germany's 10-year bond yield were down 1 basis point to 0.19% below the highest since the end of June at 0.174% on Wednesday. Major European market indexes were also trading in the positive territory, as the German blue chip DAX index is up by 1.38%, while the benchmark index of France, CAC 40, was up by 1.51%. All in all, European markets are trading higher following the positive announcement by Russia that it plans to stabilize the neutral gas prices by boosting gas supply to the continent. Additional gas supply could be beneficial in addressing the current energy crisis in European countries. Meanwhile, to Asia now, Japan's Nikkei share average rose on Thursday after 8 consecutive sessions of losses, as signs of progress in U.S. political negotiations over debt ceilings offered a catalyst for bargain hunting, but the broader topics failed to maintain gains. Nikkei average added 0.54%, but the broader topics failed to sustain earlier gains to end at 0.12%, marking the 9th consecutive day of losses, which is its longest losing spell since 2012. Over to South Korea now, and the shares snapped 3 days of losses and marked their best session in nearly 7 months on Thursday, boosted by hopes of easing Sino-US tensions and progress on the debt ceiling impasse in Washington. The benchmark Kospi closed up 1.76% after it declined 1.82% on Wednesday. Local share price index futures YAP CM1 rose 0.5%, a 4.3 premium to underlying S&P ASX 200 index close. The benchmark closed 0.7% higher on Thursday as the Australian dollar was holding its own on surging energy prices, which gave it a lift on the euro and the yen, while the New Zealand neighbour lagged as the market pondered the likely price rise of increase there. The Aussie dollar firmed up to 0.7288 US cents, away from Wednesday's trough of 0.7226, but still faces stiff resistance in the 0.73 area. The dollar eased from 12-month highs last month against a basket of currencies, and it held a 14-month high against the euro. Meanwhile, the dollar index fell 0.02% and the euro was down 0.03%, while the Japanese yen traded up 0.17%. Meanwhile, crude oil prices edged higher on indications that the US may not release emergency crude reserves or ban exports, putting focuses back on tight supply. Brent crude rose 1.1% to settle at 81.95 a barrel, while WTI finished up 1.1% at 78.30 US a barrel. Improvement in investor sentiment weighed on demand for gold as well, as US gold futures settled down 0.2% and spot gold was down 0.3%. Well, that is all for now in the Global Markets Roundup, but keep watching Kalkine TV because we have many more shows lined up for you today. Holly Shields signing off.